Hello and welcome to another Market Chameleon tutorial. Today we're gonna go over put credit spread, which is one of my favorite selling options for income strategy. But very important, we're gonna focus on this specific filter. Return if stock is flat above 15%. We're gonna look and see if there are high market cap stock that return to us if the stock doesn't go anywhere by expiration over 15% return. Remember, the S&P makes, I don't know, 12% a year. This is in the next 30 days above 15%. We're gonna see what we see. So stay around, stay tuned, and of course, Market Chameleon, if you're not a member just yet, 7 days, link below. Let's get started with a quick disclaimer, and feel free to read all about it, and know that this is not a financial advice. I'm not a financial advisor. This is for education and entertainment purposes only, and my name is Eve, also known as Finance After 40. So in order to do this, you're gonna go over, just so you know, to screeners right here and click bull put spread. This will bring you to this screen, credit put spread screener. Now I'm not gonna talk to you much about put credit spread. I assume you know what it is, but if you're not, just remember that you have 3 ways to win. Option number one, option number one says that the stock goes up. Great, your credit spread wins. Option number two, and this is what we're doing today. If the stock doesn't go anywhere, return if the stock is flat. We're gonna find something that's gonna generate us more income based on history. So that's option number two. So option one, stock goes up, you win. Stock doesn't go anywhere, you win. Stock goes down a little up to your sales strike price, you win. Assuming you sold out of the money put credit spread. So 3 ways to win. One of my favorite strategy. So in this video, we're gonna focus on here. Now you can search Market Chameleon preset, and we've done a couple of videos, and yeah, there's like insane amount of possibility. Feel free to do all of that, but I want to do this. I want to see the stock, a high market stock, Google, Facebook, Apple, they don't go anywhere, and I still make money if the stock doesn't go anywhere in the next 30 days. So those are the filters. Let's see what we got. We got the next 30 days. The strike is $5. Okay, max $5. This is the key. Return if the stock is flat above 15%. Okay. You see here, ex-dividend, all that stuff, any. We're gonna filter that. I don't want earnings and all that. Theoretical edge, also pretty awesome, above 15%. This is pretty good. That means the above 15% theoretical edge means that you are making more income based on what you should have made based on history. This is where Market Chameleon makes the money, the money for you. This is where they shine, as they say. You're collecting more income based on what you should have collected based on history. So if you read it, positive edge in green is when a current market price in the spread is a good deal in relation to theoretical value calculated from historical distribution. So let's say, I don't know, you sold Apple put spread, you should have collected based on history $100, one for example, which is times 100 bucks. Now you're collecting 150. That's the theoretical edge, and that's what we're looking for. And also theoretical win rate above 60%, and show best results by theoretical edge by symbol. So let's see, first of all, how many pages. Only one pages. If you remove all the filters, you get, I don't know, like over 1,000 pages. But now we got 1 page, and I'm looking for a high market cap trades, high market cap stocks, and I'm gonna do return if the stock is flat. Again, that means that if the stock doesn't go anywhere, you make over 15% return on your money. How crazy is this? This data is pretty awesome. So let's see what we got. We got Google, price 157.67. They have lawsuits and all that, but still it was 150 last week. Market cap 1.9 trillion. Let's see. This is let's see what we got. before we even do anything. And before I go here, I like to go here. And it tells you for October 4th, okay, we're going to go over the strike prices, then we're going to go over the credit and all that. For October 4th, which is, I don't know, 3 weeks from now, sell the 155 put, buy the 152 put, 152 and a half put, okay? And basically you get paid $70 for this one strike, compared to $40, almost double, like 80% more. This is what you should have got paid based on history. So this credit spread for Google pays you a lot more than what you should have got paid in the past. But I'm not just focusing on this. We're gonna keep going over the return if flat. But just so you know, this is the edge. 17% edge means that you are collecting more than what you should have collected before. So instead of randomly going on Robinhood, Market Chameleon tells you, hey, this specific trade you make, instead of 40, you make $70, and you got 85.2% win rate, which is pretty awesome. But the beauty of this is this one. Return if the stock is flat. Look at this number. 38.9%. How crazy is this? And if you look here, the percentage return for the option spread if the option expire, same underlying price as the current underlying price as a percentage of total amount at risk. So your total amount at risk right here is 180, and if nothing happens, if basically if Google stays 157.5, they don't do anything, you are making 38% return on your money. In what? In 3 weeks? That calculate this for like a compound for a year. That's the money. That is the money. Now I see something even more interesting to me. Not a financial advice. Let's see something more that just caught my eye. Let's see Facebook Meta right now. Oh, let's close this. Facebook price 525.85, 1.3 trillion. Look at this. We're gonna go to this because this is pretty awesome. This is pretty awesome. But let's see. Let's see what we got. Price, remember, 525, and it tells you sell the 515 put, buy the 510 put for October 11, which is next month, a little less than a month. Okay, and this look at this. Collect $145 compared to $30, $31. Now, why is this? Because your edge, and this is where you want to see Market Chameleon at the peak, 32% edge. So instead of just collecting $30, this is almost 5 times more the income, 145, 93.8% chance of a win rate. This is absolutely bonkers. Let's see what we got, and this is a defined risk. Your max loss is 355 if Facebook is below 510 by expiration. But the goal of this specific video is over 15% return. Stock doesn't move. So if Facebook stays 525, you are making 40% on your money. 40%, that is absolutely insane. Feel free to read this again. That basically means that you are making $145 compared to your 350 that you're risking, and that's basically, yeah, that's 40% in about a month, less than a month, in 3 weeks. Okay, now if I want to go super crazy, I can do a couple of things. I can either filter by return if stock is flat with the highest ones. It's only one page, so there shouldn't be a lot of stuff. But yeah, Facebook and Google, the first two. The first high market cap gives you the most return on your money. That's actually surprising. Usually it's small cap. Very, very surprising that Facebook and Google gives you the most amount of money for this put credit spread if the stock doesn't move. This is actually pretty interesting. Trade ideas, trade opportunities. All the rest are still 30% all the way, and the minimum is 15. So you got a lot. You got a lot of options in here. Now, if you want to go a different route, you can click like you want to collect the entire income. I would click on theoretical edge and change this twice. Again, we only have one page, so it's not a lot. Again, Facebook, the Facebook trade, yeah, that caught my eye, is number one. You get the highest edge and the highest percentage if stock is flat. So I might add this trade to my own portfolio in like 10 minutes. Not a financial advice, but look at this. 5 times more the income, 145 compared to $30. That is the power of Market Chameleon. You would not found this trade just randomly scrolling over Robinhood and look for trades. I don't think people are looking specifically for Meta. Maybe Apple. I don't see any Apple, but not Facebook. And a specific trade, specific expiration, specific downside cushion, all that stuff is absolutely bonkers. Now we got other stuff in here if you want, like MU, okay, Micron collects $76 compared to $8, which is almost 10 times more. 30% edge, same 93% win rate for October 4th, but they have earnings, you see. So again, the Facebook trade for me is a winner. Of course that Facebook can go below 510 and you lost all your money, but you could have lost a lot more because you could have get paid $30. You should have got paid 30 and pay collateral of 430. Instead, Market Chameleon found you a trade that you are collecting 5 times more the income, 145. Max loss is 355 if we're going below 510. And if the stock stays the same, you are making over 40% return on your money. This is how we do it. 7 days trial for Market Chameleon, link below. I will see you next time.